Hey, it's Jack from Alpha Charts with a state of the market video. Today is October 28th, 2023. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. If you like these videos, please like and subscribe to my YouTube channel. I'm on Twitter or X at AlphaCharts365, posting things literally every day in my market thoughts and commentary. And if you really like my stuff, I do have a subscriber group where I get more in depth in what I am seeing. So check that out on X. Okay, let's get into these charts. So we have the SPY here, and I'm gonna, that's the big structure. I always like to start with the big picture type stuff, and you see this very significant lower high right there, matched up to here very nicely. And let's zoom in. I mean, tons of selling volume as it comes down. Is this capitulation or capitulatory? Somebody was asking me that today. I don't think it is yet, but again, we'll only know that really after the fact. But it's a good amount of volume, and in my opinion, it shows that institutions are there's a lot more selling than buying going on. That's it. There was a VWAP from the COVID lows right here that I have on the chart. You see that price does not care about that VWAP, so we're just going to take it off because it's not relevant. So we'll just keep the moving averages on here, and as you can see, price is now living below the 200-day moving average. We got, if you've been watching my videos, underneath the 50, and that was problems. Underneath the 200, those are big problems. So as long as price is underneath the 200, that's going to be some issues. And 200-day is going to start to flatten out pretty soon. Going back 200 days is right in, let's see what day it is. January 11th, right? So almost a full year. But yeah, as we get rid of this data and price starts to live below here, you're going to start to see this 200-day start to flatten out over time. It could take weeks. And that's never good, right? Flat to declining 200-day, never good. So SPY has problems. RSP, again, people were saying, oh, there's a ton of volume over here on the 26. Was that capitulation? I just don't think so yet because, well, we continued lower the next day, right? It wasn't quite the washout. And you see, it wasn't, if I'm looking for capitulation, I want a hammer like this, where we try to move lower, we couldn't, and then bulls pushed it higher. So I don't think that that's capitulation. I think that things are just getting washed out. RSP is looking pretty nasty. It's got room to the downside, right? And it already has a declining 200-day moving average. Look at that. It's already starting to decline. That's a problem. This is a bearish alignment. There's no other way to say it, right? We talk about these broadening formations into moving averages, just not a good look. Not a good look. Here's the Qs. Also, again, still above the 200-day, which is rising, right? That's pretty crazy. And still above the VWAP from the beginning of the year, right? So this is now an important area. And so you see what's holding up better, right? I mean, Qs are basically mega caps names. And up to this point, they've been holding the market up. We're starting to see them start to lose it a little bit. By the way, let's go back to SPY real fast. I like to look at my weekly down. I forgot to do that. Down 2.49. RSP was down 2.44. So about the same, right? Qs were down 2.59, so about the same. Again, just losing everything. Equal weight Qs down 3.14, much worse, right? That's worse than that. So, looking at the equal weighted, they are below the 200 already. So again, it just shows you how, whether you want to call them the Magnificent Seven or whatever, the mega caps are holding up the Qs, whereas the equal-weighted Qs have already broken down, big volume on the breakdown. This is a very significant area. I've always talked about the 73 area being important. It lost it. That is not good. Not good at all. It has to retake it for things to be bullish again. Ugly. Looking at mid caps, Mid caps lost this area on Friday. Again, if it reclaims it quickly, well, maybe that's something. But we have the flat 200-day and it's starting to turn lower just slightly, but it's there. Again, that's a bearish move, right? Declining 200-day, turning over. You could still call this a double top. You could call this, I don't know what you call this, kind of a double top look to it, but it did break below this area, this 429, 430 area. And that's not good sign, right? I mean, there's no other way to say it. Looking at IWM closing at multi-year lows. This was a very significant area. If it does not retake it quickly, I think that with this 143-ish is very possible. Again, just, that's another, 10% or so. That's a pretty nasty move. And I think it's very, very possible. So just be careful out there, right? This was you've seen me post this chart before. It's a nice little short chart. So is what it is. Looking at banks. Banks took it on the chin, man. Down 1 point. Oh, you know what? Weekly on the IWM. I don't know why I'm forgetting my weekly chart. Down 2.55, so very similar. XLF down 2.39. Again, these are all in that 2.5, up to 3, between 2 and 3% down. Let's go back to daily. This $30 level will be very important, but again, nothing good is happening. Didn't even get a real bounce, which I was thinking we would get a bounce. Nope, not even a real bounce. Looking at semiconductors, SMH, right at the 200-day. So far, it held it. I don't think, based on the other charts, that's likely to hold. I don't think it is. On the week, you see it was down 2.65. And looking at XSD, which is the equal weighted, it was down 4.37 on the week. And when we look at the equal weight, I hope you guys are keeping up with this because I know we do this every week. So I'm assuming, most of y'all have probably seen these charts. I mean, look how it has now gone from a rising 200-day, living underneath it, fell down again, and now the 200-day is flattening to starting to actually hook. It's not even getting much of a flat. It's actually just starting to hook around. That is not good at all. And you see the reason why it's starting to hook is we're losing this data here. Replacing it with this data here. So it's going to very rapidly turn lower. Again, very bearish look. Semiconductors are going lower. That's not good. Financials going lower. That's not good. Home construction underneath the 200-day. That's not good. Looking at XHB, again, they measure slightly different things, both in the building. This has a little bit more of the ancillary, building supplies and materials. Again, living under the 200-day, not very good. What else do we have here? Transports breaking down, very similar to like mid caps in some ways. Breaking down this important area, not very good. And then let's look at the equal weight transports. Again, breaking down, not very good. Now, are these last capitulatory type moves? I mean, it's pretty dramatic, some of these moves. We won't know that till after the fact, but just with the data that we have here today, it's hard to say that these are bottoms. So let's go and look at the internals and see if they are speaking bottoms to us, right? So let's see on the VIX. No real spike on the VIX. That usually marks bottoms. No real spike, right? That does not look like a bottoming VIX, bottoming markets for the VIX at all. Let's see credit spreads. Did they blow out? No, credit spreads didn't blow out, right? Again, that doesn't have bottoming look to it. This is, potential bottoming move. This is very much bottoming move, right? Bottoming type move, blowing out credit spreads. This looks nothing like this or this. So credit spreads are not saying it's a bottom. Let's see if breadth is washed out enough. There was a little bit of a divergence there. And so breadth, to me, isn't washed out enough. There's room to the downside, right? There's room to the downside. That's more like a bottom right there. That's bottoming. That's bottoming. And look how it rebounds from there. Once it gets here, see, once it gets here, it rebounds so hard. To me, not bottoming action, in my opinion. Let's look at put call ratio. Are things extreme on the put call ratio? Equity onlys? No, they just didn't get extreme, right? Did not get extreme. That's extreme. Even this you say was extreme on 10-4, and we get some sort of rebound. But no, we didn't see any, we're not seeing extremeness, right? Let's look at the 10-year yield. It's just consolidating in this little 4.9 5.0 range to 4.8 5ish 4.84. Again, my feelings, I made it very well known. I think we're going to be 5.1 to 5.4 ish, somewhere in there in this green zone. And I think that's a very likely area where 10-year stops going up. Maybe that's what we need, a sharp move into this solid 5 point whatever area for it, but we don't have that yet. And looking at the dollar, and let's go back to a bar chart because I like that for the dollar. We have this kind of consolidation right on support, and after this giant move, well, the prior trend was higher. The expectations this moves higher, which will probably put a ton of pressure on equities, and maybe that's what we need. One more spike. And I have no idea if we're getting back to these highs or not, but maybe another spike and maybe a lower high in the dollar will cause the cascade of events that we need for that final push into capitulation, and then for us to move higher. I don't know. That's just a possibility. But we take it day by day, week by week, looking at all these charts to figure out where we are in the market. Again, if you like this type of analysis, I do this every day for my subscribers with multiple videos throughout the week and market notes, keeping everybody engaged on what's going on. So check me out on X at AlphaCharts365. Not just like and subscribe to my YouTube and follow me there either way. And I hope you guys have a good week. Just be careful out there, right?